Fools, dividend stocks have never been more popular as investors try to figure out how they can get the combination of current income from their portfolios as well as future growth potential to make their assets worth more over time. And in trying to figure that out, people are looking for the best dividend stocks they can possibly find. My name is Dan Kaplinger. I'm the Motley Fool's Director of Investment Planning. And today I want to look at three stocks, Altria, AT&T, and HCP, and explain why they are such extraordinary dividend stocks. Now, most investors understand that there are three basic traits that you'd like to have in any dividend stock. You'd like the stock to pay a high yield, you'd like that dividend payment to be stable and consistent, and ideally you'd like it to grow over time. Now, unfortunately, a lot of dividend stocks don't give you all three of those traits. For instance, many high-yielding stocks, they may have a good, healthy payout now, but it's not necessarily consistent or something that you can rely on. On the other hand, stocks that do have good, consistent records of keeping their dividends stable or growing over time may not pay as much of a yield as you'd like. And that's one reason why, in particular, when you look at Altria, AT&T, and HCP, you really get all three of those favorable traits in one package. For instance, take a look at their track records of raising dividends. All three have raised dividends on an annual basis for each of the last 25 consecutive years or more. HCP for 28 years, AT&T for 29 years, and Altria for 45 years. Now, all three of those stocks would ordinarily qualify to be dividend aristocrats based on that track record. As it turns out, Altria is not a dividend aristocrat. It has to do with the spin-offs of various units over time that affected its dividend payout. But for dividend investors, they've seen rising payouts, and so all three of those stocks are really attractive. At the same time, just because they've raised their payouts doesn't mean they've been stingy about how much they pay. All three of those stocks have 5% yields in that neighborhood, and so you don't have to worry about getting a low payout in exchange for the stability that you want. In addition, all three of those stocks have really met the test of time. They've all gone through tough times but still been able to keep their dividends moving higher. For Altria, they got through periods of massive litigation risk that could have really sent the stock diving, but it got through those times. For HCP, they've gotten through some of the challenges that have been involved through recessionary environments. For AT&T, massive changes in the telecom area where you used to have reliance on landlines. That's moved over to the wireless segment, and so it's been a real challenge for it to adapt, but adapt it has, and all three of those stocks really have the staying power that have demonstrated why they're such extraordinary dividend stocks. Now, for more on dividend investing, be sure to stay tuned to Fool.com. Thanks for watching, and Fool on.